tomorrow night after the close. That certainly will be closely watched. Joining me now is Bolvin Wealth Management Group President Gina Bolvin. Gina, great to see you. Thanks very much for being here. Your reaction to Lowe's, what you're expecting from Walmart and the retail sector overall.
Hey, good morning, Maria. Thanks for having me. I'm not surprised on the beat. We do like the big box stores, and we do see a positive trend in consumer discretionary. One of the reasons is because you cannot stop the U.S. consumer. Retail sales is at an 8-month high. And as I mentioned last time I came on, we've seen the consumer has more in almost twice as much in savings as we thought. And that is spurring this activity. It's also been a great earnings season so far. It's been, again, better than expected. Coming into earnings season, we expected 4% earnings per share growth on the S&P 500, and we're tracking 8%. So we are expecting this to continue into 2025. And regarding Walmart, it's mostly, most of their sales are derived through groceries. So that's more of a consumer staple stock, but they've definitely been a beneficiary of the consumer trading down.
Well, it's interesting to see this market selling off right here. What do you think is behind this sell-off of 200 points on the Dow Industrials this morning? We had lots of optimism going into the election, given the expectation of business-friendly policies. Is there something that you see specific undermining this market this morning?
Well, there are some geopolitical tensions, but let's face it, it's been an incredible rally, in the market. I think there's some murkiness around the Fed's messaging. Last week, Powell said that he's in no hurry to cut rates, but yet in September, there's a 50 basis point cut. Inflation remains a little bit more sticky. CPI for the last 3 months has been a little bit higher. So I think a lot of the gains have been pulled forward regarding the euphoria over the Trump election, with investors anticipating lower taxes, less regulation, and a more business-friendly environment.
Yeah, it's really interesting to see this market trade this way ahead of the Nvidia number. And I'm wondering if this is playing into that at all. Mike Lee, jump in here. Nvidia, one of the biggest high flyers of this last couple of years, leader of advanced semiconductor chips. Stock is obviously very heavily traded, and it is now a Dow component. It will report earnings tomorrow night after the bell. Your expectation?
Yeah, I expect spectacular earnings. I think the market is going to be myopically, or the investors that are trading the stock are going to be myopically focused on the performance and guidance around their Blackwell chip. Story over the weekend talking about them overheating and them speaking to some customers saying you need to redesign your server racks. I think that is going to be the hot button issue. But it just seems like with the way the election went, and after last quarters, with Nvidia stock selling off close to 20%, really on a slight disappointment of guidance of these Blackwell chips, that it's no longer like the Super Bowl or the World Cup of earnings every quarter, even though it's extremely significant. But with all the performance and kind of the broadening out of the market, it might not be as big a deal as it's been the last 3 or 4 quarters. What are your thoughts, Gina?
Yeah, well, my thoughts are that it's really all about how much can they beat by, right? It's a very high bar and very tough comps. And regarding what happened with the Blackwell chips overheating, that was in the news yesterday, I think the point is there's really not a lot of competition. So some of these orders may just be delayed, but it definitely is a showstopper and a market mover, maybe even more so than the Fed, because AI has been underpinning the entire market. You look at industrials, having up over 20% this year, and you're looking at utilities up over 20% this year. AI is underpinning the entire market, so it's it's definitely something to watch.
The October housing starts, building permits out this morning, 8:30 a.m. Eastern. Gina, economists are looking for new homes under construction to come in 1.8% lower at an annualized rate of 1.33 million permits for future construction. To rise 0.4% to 1.43 million. Your thoughts on this space? New research from the Cleveland Federal Reserve is finding it may take until mid-2026 for rent inflation in the consumer price index to subside toward its pre-pandemic levels, Gina. And is this going to be a market mover? How important do you think this is this morning?
You know, I think that moving forward. I think this is going to improve with building permits as there's more deregulation with the Trump presidency, and building permits have been down, and it's the biggest cause of the CPI staying up because housing is 30% of the CPI. So I think it's important to watch, but I'm not expecting big things today.
All right, Gina, great to see you this morning. Thank you.
Thank you for having me.
Gina Bolvin joining us. Quick break, and then President-elect Trump says he will use